Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again this week, where we give you a recap of what's going on and we highlight some interesting or key news. And this week we're going to be talking about taxes and coming up to year end, obviously the end of 2020. Different things you can do, different things you should consider before we finish off 2020 and close some door on some of the tax strategies you can implement. But before that, we're going to jump into the news. As always, though, remember everything we cover here is for educational purposes only. Do your own due diligence or reach out to a professional to review your current situation and see how these might apply to you. And as always, we're happy to help out. You can reach us at mikeonmoney.com. We answer any of your questions you might have. You just send them in, or you can access our portal there with the most of our educational material and our other videos that might pertain to your situation. So again, if you are watching live, feel free to use the Q&A button. Otherwise, you can send in your questions by email, and we will definitely get back to you. We'll try to get to the live ones today. But record has shown that I go over time every week, as there seems to be a lot going on every week. So if I don't get to it, I will definitely follow up with you right after. So let's take a look at what's going on in the economy. This morning, the U.S. futures stocks fell a bit. They have recovered a bit in daytime trading. A little bit of curb enthusiasm around the markets, some concerns of valuations. In fact, we're kind of see a flashback to end of 2019, where some of the biggest concerns we had on the table back then was the Brexit deal, as they attempt to avoid a hard Brexit and come up with a trade agreement and deal with borders. The Asian U.S. or U.S.-China specifically trade tensions, and then of course the overall economic health. And we are seeing some concerns that maybe the markets have gotten ahead of themselves. Certainly in certain sectors, we're seeing that. We'll touch on a few of those things as we go through here. But we're definitely seeing some overvaluations that we should be cautious about. And that was the reason for this morning's little bit slower start than normal. As I said, it did pick up a little bit today, but not a significant day. Also, we're seeing out there vaccines are being airlifted and delivered. This morning, the very first person in the UK and England got the vaccine outside a trial, so they're actively giving out the vaccine. So the first Western country to start that process. Canada has stepped up to bring in. They're talking about 250,000 vaccines coming in this week, possibly. Obviously, that's not many, given those are the Pfizer vaccines, which require 2, so that's 125,000 people. But they will be started, and obviously more and more coming. Also in the U.S., Trump signed a executive order prioritizing the U.S. for the U.S.-made vaccines. So any of the vaccines being made in the United States to be prioritized for the population in the U.S. I'm not sure how that's going to play out, what kind of standing that has, but I don't think it's going to be a big issue in the long run anyway, as all the different vaccine producers are cooperating for production around the world. Obviously, this is not just a one country issue, and they're going to focus quite a bit on getting the production ramped up as fast as possible and get distribution out there as fast as possible. We're already seeing the AstraZeneca Oxford vaccine in the UK also go into production. And keep in mind, that's the one that does not require the very low temperatures, the minus 70 degrees Celsius storage or shipping. So that one's obviously going to be a lot easier to get around the world, and especially to more rural locations or areas where they don't have the money or the ability to distribute that with those those extreme conditions, because those freezers are expensive. Not even everyone in the big populated cities would have it. Not every doctor's office would have it. They'll have to set up special locations. The locals, there's a lot of pressure on the locals to open Disney again. Obviously, it's been shut down. Specifically, we're talking about the one in Paris. Nothing's moving. France is in a complete shutdown, restrictions over there. There's obviously a big demand to reopen the economy. Disney, of course, facing permanent job losses and economic loss being closed there. The Florida one is open. I believe the California one is closed. So Disney's obviously trying to put some pressures and trying to figure out how they can reopen again sooner than later. Much like the entire world, as far as the economy goes, people want to open and get back to business. People are starting to suffer maybe a little bit from cabin fever. Obviously, I've even got my cabin clothes on today. I'm working from home. I've come down with a little bit of sniffle, which is really just a cold. I don't have any other symptoms, but obviously being cautious and isolating myself while I get over this. So the whole world's doing that. In fact, here in BC, of course, we've just announced that our shutdowns will remain into place, or our restrictions, I should say, will remain in place until January 8th. So a bit of a damper on the holiday season. The sell signals are indicating a bit of road bump ahead as the world worries a little bit about the equities. As I mentioned there a few minutes ago, we are seeing, after a very strong November and a strong start to December, there are some on the institutional side seeing some sell signals starting to pop up as major investment banks are starting to raise some cash, taking a bit of pause on these record highs and really seeing where the economy is going to fall. We've been pretty much talking about this, since October, taking some profits off the table if you've got some. Doesn't mean get out of the market. We had a whole video on, I think it was 2 weeks ago, on what to do or how to position your portfolio if you're concerned about a pullback or a recession. And it doesn't mean getting out of the market. It just means maybe shifting some of your portfolio away from some areas that are potentially overexposed to that growth, and into areas that will continue to see solid growth even if we go into a pullback or recession. So maybe not an unwise decision here going in December. December traditionally is a slow month with much lower volume, so well worth considering that. The Congress is also moving to vote on a stopgap bill for COVID-19 aids, and of course avoiding the government shutdown as they have to reapprove budgets or spending, and they're trying to wrap in there a stopgap COVID-19 package, or at least a bridge package until we see the shift in government happen in January. The U.S. is slapping more sanctions on Chinese officials now. They've been creating a blacklist of companies that Americans are not allowed to trade in, and they're not allowed to do business in the United States. And now they've slapped more sanctions on China. This time they're targeting the officials with the Hong Kong crackdown. So this will limit financial sanctions as far as their business with the United States, but also limiting their travel in the United States as well. The G7's finance officials, back the need to regulate digital currency. So I've talked a bit about this. The cryptocurrencies or digital currencies. Bitcoin being in the news, probably the biggest one everyone talks about. We're actually in the process of putting out a deep dive on Bitcoin and cryptocurrencies in general. But the general theme from central banks around the world, as they've started to investigate this, it's becoming a bigger and bigger growing concern. Facebook is they want to introduce Libra, which is their cryptocurrency, as a currency for their marketplace, and obviously that would have a big impact on countries' currencies. So they're all looking into and doing their due diligence and research into how they could maybe introduce their own cryptocurrencies, or how they can be involved in those cryptocurrencies. But the big challenge is it's non-regulated. This is what's attracted or started the attractiveness of the cryptocurrencies is simply that, especially on the not so legal front, I won't, because it's not all illegal, but on the not so legal front, it is used as a form of currency, among many other things. As I said, it's non-centralized. It's not, it has nothing to do with any one particular government, but it is completely unregulated. There has been a lot of fraud. There has been a lot of theft surrounding it. There's been a lot of problems around the lack of any kind of regulation. And as it tries to move into a more mainstream situation where, the public can easily access it, use it, or even spend it, kind of the local retailers, at least some sort of regulations have to be put into place around that in order to give just the individuals, the population, and regulators the confidence that it will be legitimate, right? That people can use it, buy it, and know that it's not going away tomorrow. So that's going to be a big 2021 focus, I think, by a lot of central banks. As I said, there's more and more push for Bitcoin, especially as it hits record highs here, but also as other entities such as Facebook looking to bring it into the mainstream. As every week, we take a look at the numbers out there. Total cases around the world has gone through 68 million. Total past 1.55, moving towards 1.6 million. Obviously, harsh numbers. In the United States, they're 290,000 people have passed so far, approaching that 300,000 number with over 15 million infected. Canada, through the 12,000, approaching 13,000 have passed, and through 425,000 at 426,000 people infected. And obviously, the big concern here is the numbers are not slowing down. And we're at that point now, the hospitals are starting to become stressed. And that's what we've always said. It was the same earlier the year in the first wave. We definitely saw it in New York, obviously, with the makeshift hospitals and morgues. The big risk, the big risk for the death rates are that the hospital becomes overwhelmed. So people who need care won't get care because there's not enough beds, not enough ventilators. Obviously, for this wave, we're better prepared. The medical systems have been able to get, the PPE they needed. They've gotten more ventilators than they had in March. But even at those numbers, they're starting to become stressed. And then we're not just talking, of course, about COVID anymore. If anyone has any other health issues that they need critical care or acute care for, those beds might not be available, might be taken up with COVID patients. So that's the big challenge we're facing into, and that's really what we've got to see us come out of. As a global population, we have to come out of the stress on the medical systems to make sure that people who are getting infected are able to get the proper treatment and can recover. And that's really the next step we have to see when we look at these numbers, and really hopefully with the vaccine coming out sooner than later. I've always said the vaccine's not going to be a magic bullet, but if it can slow the progress of the spread and slow those numbers in hospitals, we'll be in better shape. The economies will be in better shape, and we can start to reopen to more normal levels. I don't know if I'm going to make a call, it's going to be back to normal, but certainly closer to what we consider normal. So let's take a look at the individual economies coming up in the U.S. We've got all the big financial firms, Goldman Sachs, JP Morgan, Wells Fargo. They're getting together at the annual financial services conference. All the heads of those companies getting together to discuss kind of what 2021 is going to bring, where they see focus, where they see challenges. It's a boring read, but it's a really interesting read. So we'll hopefully have some news on that in the coming weeks. Big pharma biotechs are also getting together. Pfizer, Eli Lilly, Johnson & Johnson, Glaxo, Roche. They're all getting together, to figure out that manufacturing and distribution of those vaccines. It's going to be a conjoined effort. It's not going to be one company off on their own. Just no company, with a 2 vaccine system, to get this out, 7.5 billion, over 7.5 billion people in the world. That's 15 billion vaccines to not only manufacture, ship, and get to different countries. So all the companies are getting together to make that happen. So looking forward to see that plan as this rollout starts to accelerate. In the economy, GameStop, we kind of wanted to highlight this one. GameStop, which of course is a video game store in the United States, saw some drops in the third quarter revenue due to the pandemic and the people not going into brick and mortar. And I kind of highlighted this because here's the difference between the e-commerce and the brick and mortar businesses, because we did actually see the release of the new Xbox console, so the Microsoft console, and of course Sony's PlayStation 5 also came out. Have been massive sellers. They're sold out everywhere. You can buy them aftermarket at a premium, but trying to get them from a store as next to possible, and all that went pretty much online sales. So here we're seeing GameStop, a sector which sales have been booming for the product, but not in the brick and mortar, but on the online. And we're going to see, I think through this holiday season, we're going to see a lot of that. Now, I have mentioned in the past, and I do recommend, maybe if you can, try to support some of your local stores. I'm not going to bash Walmart or any of the likes, the Home Depots, but that's not really what the suggestion I'm giving you here. It's the local shops, the local owned shops. Yes, we can order it online. Yes, it's convenient, but a lot of them are struggling. This is the big season for sales for them. If you can, a lot of them are doing their own delivery set process, or at least curbside pickup, so you can still stay safe. Do try to continue to support local businesses if you can, and obviously through this holiday season, it's going to be more and more important. Also in the US, the IPO bonanza is continuing. So if you haven't been following this, the initial public offerings, or the new stocks being launched out there, have been just going crazy. Valuations have been crazy, probably way more than should. This is one area of the market's going to be really cautious about. Airbnb is getting ready to take theirs public, and they continue to raise the price at which they're taking it because the demand is so high. So that's always a concern, just in the fact of what's driving up that price. Obviously, people aren't traveling, although Airbnb's recovered fairly well with people, still doing social distance, not trusting the hotels as much, because of the contact, and trying to isolate themselves into, houses and apartments, even when they do travel. So on that front, they're doing well, but I don't know if we've seen that much of a recovery that's had them upsize this IPO, I think, on the third time at this point. So be cautious around the IPOs. Make sure you know what you're buying and what price you're paying for. PaySafe to go public in a Bill Foley backed $9 billion deal. Here's another company that's going public. Bill Foley, of course, a veteran investor, has agreed to merge with PaySafe and for a $9 billion include in debt, and then spin that up publicly. So just another merger. It has been a year for mergers and acquisitions. Exxon's facing its own battles. We've talked about the energy sector having troubles and continued troubles. We have seen a rebound a little bit in their pricing on the optimism of the vaccine reopening travel again. But even then, it's going to take some time. And here we have Exxon getting into a proxy fight. So basically what we're seeing here is an activist firm called Engine Number One is organized enough shareholders to get a proxy vote. So they have enough support of shareholders that they're pushing Exxon's management to seek out or grow the business more towards clean energy. And help it improve its financial performance by going into the more clean sectors, as opposed to focusing strictly on the fossil fuels. It's interesting that there's a battle. Most of the energy companies are doing that anyway. Obviously, this group of investors feel that they're not moving fast enough, so they're trying to push Exxon that way even further. Jcpenney retail is filed for Chapter 11. So Jcpenney is again a brick and mortar. Of course, we've seen them around a long time. Have had financial troubles in the past due to some management decisions. This time around, mostly COVID related. They go into Chapter 11. Two of their biggest landlords, Simon Property and Brookfield Asset Management, have acquired most of those assets, and will go through liquidation and reorganization of those assets as they move out of the protection of Chapter 11. Bayer, we talked about this a couple months ago. Bayer was doing a deal with Altera for a anti-tumor treatment medicine. And they're accelerating that therapy and the rollout of that drug. So other things are happening in the pharmaceutical world other than just the vaccine, and Bayer's taking that approach. Coming up in Canada, the pipeline Enbridge is expected to announce its capital spend, so how much it's planned to spend through 2021 as they continue to focus on the line 3 of their pipeline, linking the oil sands with the Midwest refineries. So this is one of their biggest projects they've been working on for the last few years, and they're going to be rolling out their budget and spend and what that timing looks like. So we'll keep a close eye on that as far as the pipelines go. We did see the IV manufacturing index numbers come out last week. As I mentioned, we have seen pretty much steady across all the numbers continue to improve, but slowing. So not at the same rate. Obviously, when we reopened, there was that big pent up demand as things had completely shut down for a while, and people were getting out and buying or catching up on their spending, if you will. But that's starting to slow now. We did see some better than expected unemployment numbers, both in Canada and in the U.S. last month. As long as we can hold that trend, it's going to continue to improve. But remember, the unemployment is one of the key indicators that we keep an eye on. That and of course inflation/interest. And Bank of Canada is expected to come out this week and actually reaffirm that they're going to keep the interest rates low. They do have a 2 to 3 year plan to keep them low. But we'll keep a close eye on that as well as the unemployment numbers. As I mentioned, Canada's looking to receive the first doses of the Pfizer vaccine in December here. In fact, some of the reports I've heard will be potentially this week, maybe into next week. And some of the provinces are already kind of started to hear their allocations. So we'll start to get a better idea as how many. First of all, how many we're going to get and when, and also the rollout plan of who's first in line. Dominion Diamonds is reaching us a deal to sell to Acadie, sorry, all stuffed up. Mines. This was a Dominion had gone into bankruptcy protection 8-9 months ago, and this is just finalizing their sale of the mining. Now, as we've talked about, the mining industry has picked up quite a bit, both in gold and other metals. So we might see some good activity in diamonds as well. Canada's picked a former pension fund manager, Sabia, to be its top official. He's going to take over the Canada's second biggest pension to start running that for 2021, and also looking at where and how those stimulus dollars are going to be distributed in the new year as we go into our second round of stimulus packages. So what else we're going to talk about today, as I mentioned, year-end tax reform. So what can you do? Oops, sorry about that. What can you do before year-end? So, well, there's some really easy things to keep in mind for tax reforms. One is, tax loss selling. So let's say you have some positions that are in a negative point right now. With maybe it's in energy, maybe you got caught up in a little bit in the hospitality or travel areas, and you want to cash in on those or take advantage of those losses. You can crystallize them, so you can sell them before year end. You've got to do it sooner than later because you have to settle out before year end, so that means completely settle the trade. And then you have to be out for 30 days. So you can go over the year end for that, but you can't repurchase that same position before 30 days are up. If you do rebuy it again, it's like you never sold it. So you won't crystallize that loss. You won't be able to claim that loss on your tax return. So it's something to always go through your portfolio. Look at any dogs you have in there. Make sure you crystallize some losses. Maybe you want to offset, or you have some gains to offset. The other thing to keep in mind is do look at those gains. What's your tax situation this year? Are your taxes lower this year for whatever reason? Maybe you drew less out of your company. Maybe you were off for a period of time because of COVID. If your income is lower this year than it's going to be next year, and you do have some gains this year, might be worthwhile triggering some gains as well to have them tax them in your lower tax year, as opposed to carrying them forward for future years when you might be in a higher tax bracket and pay more taxes. So keep that in mind. It works both ways. Really go through that portfolio. The other thing to really take a look at is kind of your longer term plans. We always tell people, year end, it's a good time to review the financial plan you have in place, or maybe set an appointment to do a new financial plan to make sure you've got things all in order. Double check your beneficiaries on your accounts, whether it be TFSA or RSPs. RESPs, if you're a parent or grandparent that you're contributing to an RESP, you can carry forward the grant money that the kids qualify for, but you can only catch up 1 year at a time. So depending on how old they are, because the grant stopped the year that they turn 17. So depending if you've missed some past years, you want to catch up on that sooner than later. You've got till December 31st to figure that out. And get that grant money for this year if you haven't already done so. So I do recommend take a look at RESP contributions if that's something that's in your plan. RSP contributions, well, it's a good time to take a look at where your income is this year. You do have until March 1st to do the RSP contribution, but start getting a sense of what your income is this year, how much deductions you're going to need, whether you want to max out that, or look at other strategies like your TFSA, or if you have corporations, whether you have a passive investment account within the corporation or holdco, definitely look at using those as well as a strategy. Basically, all in all, for December is really take a step back and take a look at a summary of everything. Review everything before year end, because once we go past December 31st, it is hard to other than RSPs, there's not many different things you can go back on and fix or trigger the tax advantages of for the calendar year. So do take advantage of anything you can for 2020. Also, make sure you've kept all your receipts, anything to do with working at home, because there is going to be some special room for people working at home. And of course, there always is allocations that you can claim a percentage of square foot of your home office for tax deduction purposes. Be a little cautious because it does make that portion of your home taxable if you sell it down the road, versus, of course, your principal residence is tax-free should you sell it under normal. Most people aren't using that big a percentage of their home for work, so it shouldn't impact too much of that tax-free status of the house, but keep that in mind. It does kind of come in there. Also, remember, as of January 1, your TFSA is going to have another 6,000 in room. And of course, if you have any investments outside your RSP, you want to be maximizing your TFSA first, because it is all tax sheltered in there. Depending on your individual situation, your savings, you kind of have maybe 4 buckets if you have that RESP, but you've got the RSP, the TFSA, we call it a cash account or an investment account, and then your RESP. So your savings can go to those different locations. Of course, the one hardest on tax is the investment account. If you have a corporation, of course, you might have, as I mentioned, a capital account within the corporation as well to take advantage of the taxations over there. But those are kind of the main buckets that you might want to use. And everyone's different as to the mix you want to use as far as taxation go. And also keep in mind, it's not about just taxes going in. where are you paying taxes when it comes out? Again, if you have a pension plan, of course, that's going to contribute to taxable income. Depending on how large your RSP is, when it converts to a RIF or you start to withdraw from it, what's that going to look like? Do you have other strategies you've implemented, RCAs or IPPs, around corporate executive packages? Then, that can also have a bearing on what your taxable income in retirement looks like. So those would depend on where you want to place the money. So it's always good to do a big review before year end. Make sure you know where the money's, your savings are going to go, or where the best place to set you up for the future when it comes to taxation. So with that, that's what I have this year. For today. As I mentioned last week, this is our last live video for 2020. We're going to take a bit of hiatus here over Christmas. We are going to do a special year wrap-up video you all know about, just to kind of summarize everything that's gone on in 2020. Of course, capture anything that happens in the next couple of weeks. But we'll come back with our live ones back in January again, and we'll get everyone caught up as we start into the new fresh 2021 in just a few weeks. So with that, I'll say goodbye. If you have any questions, as always, you can go to mikeonmoney.com, send us your feedback. Love to hear it, and we will talk soon.